Welcome to the Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And what happened this week? We had gold rise. I think we hit another record-breaking number on gold. That's getting exhausting, buddy. It's just the winning is exhausting. Silver, we had a pullback in silver. This week on the show, look, we're headed right into the U.S. election. So let's talk about outcomes, what it could mean to the gold market going forward, the silver market going forward. And we'll have that discussion in the upcoming segments. But first, let's talk about this silver slam. Jerry, we put out a post on X just saying, you know, they raised margin requirements last week on the futures contracts. They raised requirements again this week, I believe, and they threw something like 450 million, give or take, paper ounces of silver at the market to try to get the price down. Having been in this market a long time, you kind of sit there and you say, okay, desperate times call for desperate measures. What is going on? What are they so scared of that the price rise from here?
Well, as we reported last week on the show, this was from Yahoo Finance, that 5 major U.S. banks were facing $1 billion in losses in their short sell positions in silver. So they're losing money. They need to get out of these short, which is a bet that the silver price is going to drop, and they saw the prices hit 35. So we started the week off. Silver was around $33.70. We hit a high of 35 actually, and we're now sitting at the support level of 32.50. And
so you're saying the panic is we have a lot of shorts, and if this thing breaks over 35, we're in major trouble. We got to get out of these shorts. Is that what it is?
Definitely one of the trends that we're following. We're seeing huge losses, not just on these regional banks, but these are major banks that we're talking about now. And on top of, you know, payments that some of these banks are involved in for a lot of fraud and money laundering. Some of these banks are in the red, Jeremy. So this is major stuff. But we're also heading into an election. So a lot of traders are going into lighting their positions. So a lot of less volume. So with less volume, you see a lot more exacerbated moves on silver, specifically on the downside. But yeah, we're seeing this trend of the CME and the COMEX in hyperactive panic mode for the banks. As you mentioned at the top of the show, the CME hiked margins on gold by 4.5% and silver by 4% on futures contracts. So basically what they're doing is they're making it more expensive to hold these contracts. And if you held a contract, you now have to fork up more money to meet these requirements. So in essence, what happens if you don't have the liquidity or enough capital to stand by these requirements, you got to sell these positions off. So we're seeing a lot of selling on the downside on silver. And then on top of that, you got the COMEX trading over 400 million ounces of silver, paper ounces, mind you, on Thursday. So the COMEX, they're feeling the silver squeeze. The banks are feeling the silver squeeze. We are in charge of the silver squeeze because every single ounce that you take out of these markets, they're feeling their squeeze is strangling their issue, which is, you know, a lot of fraud in these banks.
So let's talk about what these short positions are up against. We know, especially our listeners know, we mentioned a couple weeks ago, Russia is now buying silver as part of their reserves. We know that India continues to buy. So we have central bank buying silver. What else are they up against? Tell us about central bank buying of silver. Tell us what these shorts are up against, and is it possible for them to win? Can they get out of these short positions? And what we're leading to here is how short-lived or what kind of danger is the market really in right now?
There is no danger for the silver holders or the silver market, people who are involved in the silver market, as the Silver Institute noted last week that they're expecting a deficit of 215 million ounces, which is the second largest shortfall in more than 2 decades. And Matt Watson, he's a founder and president of Precious Metals Commodity Management. He basically said that the outlook for growth in electronics, and even the Jerusalem Post talked about in the military demand, it's phenomenal. this element, the do-it-all metal on the periodic table, they see no fundamental downside to silver, but tremendous demand now coming in from huge buyers, India importing. We're seeing metals move from the west to east. And for the fact that Russia is now adding silver to become part of their reserves, their monetary reserves, this is only going to bode very well for the future of silver.
The number 18778 silver, the website guildhallwealth.com. I think there was also talk at the BRICS meeting about having their own exchanges. Is that right?
Yeah, Russia will create their precious metals exchange, according to the Russian finance ministry, to become the key regulator of prices. Now, this is a disruptor, Jeremy. This is now, coming at the crosshairs of the Bank of International Settlements that saw this as a huge issue. The State Department of the U.S., in response to the BRIC meeting, came out and said, we can't have this. We can't have this challenge the U.S. dollar and the SWIFT system dominance. And this is what the U.S. is up against. And in my opinion, the USA, they may beat the BRICS to the punch with regards to the move towards a gold standard. Yeah, the BRICS are moving towards gold, backing their unit with 40% backing, but creating an exchange now. I think overall this is highlighting the very important facet of pricing. If you have a price in Asia, in Russia, that is much higher than what we have here in the COMEX in North America, we have a big problem. But we have a huge opportunity for people to do arbitrage and have product being purchased in North America only to have it imported, exported into Asia, and exported into Russia for higher payment.
I'm of two minds when I see pullbacks. On the one hand, you love to see the price continue higher and higher and higher, unabated. It's wonderful for our clients and, of course, our own holdings. On the other hand, you do like to see it take a breather for whatever reason it is, and we're talking about those right now, because you do want to see as many people get involved as possible. And, people, when they're getting into the market for the first time, they're always price conscious. So when you can get these sorts of pullbacks, it really gives them what they were looking for in the first place. We can only cut what we can cut, right, based on the current spot price. But when the market does the work for you, it's really an opportunity for people who are looking for bargains to get into the market. Now, speaking of bargains, you've got these COMEX people, whatever it is, okay? We don't really know exactly why they're doing what they're doing, although clearly if you're short in the market and you're trapped, that's a problem. But if your answer to that is, well, we're just going to dump the market lower against these people who want to buy it, you seem to be doing a disservice to yourself, and you're doing a service to those who want to acquire it. Mm-hmm. So they're trying to get the price down in the face of supply deficits, huge demand for military, huge demand for central banks, and a remonetization of gold into the system.
Yeah.
I mean, you really are...
That's a trifecta there, Jeremy.
You're really trying... So...
got to really push that button.
Yeah, and also, look, the 50-day moving average is 31.43. The 100-day is 30.61. The 200-day is around 28.83. So I think you would be really hard-pressed to get this market down very low. And just speaking of downsides in the market, because... we can only flog this dead horse as really just an opportunity, but there's always you always run the risk too of pushing the paper price below the reality world price, right? How much does it cost to mine? How much does it cost to buy it from a refiner? How much did you buy it from a wholesaler? These prices are not $18. These prices aren't $24. The cost to buy it from Royal Canadian Mint is ever rising.
Mm-hmm. Alarming.
And so is the wholesale prices. And even with lower premiums, those real world costs don't just go away if the paper price goes down. So, hey, throw 400 million paper ounces. And also, what's the amount of paper to physical? It's over 400 to 1. So when that breaks, you could just imagine where the prices are going. So very quickly, we got 2 minutes. Goldman Sachs revised where they're going with gold. They see it moving to what, 3,000 now?
Yeah. They revised their their forecast for gold probably within a month. I don't even know when was the last time, but they initially had it at 2,900, then they upped it to 33,000. But we know historically these entities are usually very conservative. They are revising upwards, so they're in the same boat as us. You know, they're with the winners, but they're going to be tempering as they normally do their forecast for gold. And they cite the things that we are citing right now. Obviously, election is coming up next week, geopolitical shocks, the Federal Reserve risks from Federal Reserve is even on there. Rise in trade tensions, debt fears. So all of these uncertainties only continue to support the ownership of real tangible gold and physical silver.
Now, here's the thing. We've been in an 80-to-1 ratio, 80, 83, 84. $3,000 an ounce at 80-to-1 ratio pulls, kicking and screaming, will pull silver to $37.50. And that must be very scary for these banks, because once you get over that $35 line, where's the stops? What's the ceiling? So you know that this is going to get dragged higher no matter what. That as gold continues its march higher, it just looks better and better for silver. Why would I buy gold when I could get silver at such cheap prices? And that's just going to push the market higher and higher. So we're in such a strong position that we're so excited about the markets. And for all of these reasons, the banking system fragility, supply demand on the markets, which we're going to get into, and even more with the upcoming election. What does it look like? What would happen to the market with which candidate winning? We're going to talk about that in the next segment. If you want to own physical precious metals in your portfolio, you give us a call at 1-877-8-SILVER. The website, guildhallwealth.com. Hold physical. Hold in your hand. Go to the vault. Personally audit your holdings. Physical gold held in your possession within the registered account, not in your possession at home, but that you own it in the vault. That's outside the banking system. It doesn't get better than that. You're completely getting rid of counterparty risk. Call us. We'll show you how to do it. The number 1-877-8-SILVER. The website, guildhallwealth.com. If you want to buy some physical precious metals, Guildhall only deals in what's called LBMA approved product, London Bullion Market Association. Now you might ask yourself, what does that mean? Gold is gold, silver, silver. But there's 66 gold refiners on the LBMA Good Delivery Bar list. That would include Royal Canadian Mint, Valcambi, Pam Swiss. And what you're getting when you're buying LBMA approved product is you're getting access to liquidity. If it's non-LBMA approved product, it might be cheaper to buy.
Yeah.
But you're not necessarily going to get the liquidity when it comes time to sell. Not everybody wants to buy back product that is not universally recognizable. So it's important to try to stick with LBMA approved product. If you go to our website, guildhallpreciousmetals.com, you'll see that all of the product is. Now there's sometimes exceptions like 10-ounce silver bars. Sometimes they're so hard to get and in such high demand that you can't help it. You've got to go with what's actually available. But usually we've never had a non-LBMA approved gold product or even 100-ounce silver bars. It's never been non-LBMA approved. I would say the only time that we've kind of known the rule when to break it was 10-ounce bars. Sometimes rounds, right? Like people like the buffaloes, which aren't LBMA approved. We don't sell the buffaloes, but if you can get them, that's great. So the idea here is, what we do at Guildhall is we educate people. We help them understand. We don't just say, here, buy whatever. Bye, see you. It's, let me tell you a little bit about how to do this properly so that down the road, you can make a lot of money. Again, for example, we have depository. We help clients to store physical product. A lot of the times clients want to take that home, and that's fantastic. You can save a bit of money by self-storing the product. But what about your exit strategy? When the time comes, you want to pick up the phone and sell. You might want to consider at some point deciding, hey, I should put some of this into the vault so that when the time comes, I can pick up the phone, get a price just as I did when I bought it, and sell it right then and there. Get the funds sent to me right away. I don't have to worry about driving an hour and a half to come in, so that I can get my price. I don't have to stop my life. What if I'm in Mexico? What if I'm in Costa Rica? What if I'm in Paris enjoying whatever? You want to be able to pick up the phone and be able to sell. And so as this market progresses, it's definitely worth considering storing physical product. And even TFSAs. You know, if you're starting to see the gains, as we are really seeing gains in the gold and silver market, maybe you're holding on to physical gold and silver and you think, man, it would be great if I could have that in the TFSA. Contact us. We'll show you how to get that into the TFSA, how to own actual physical gold and silver in your TFSA so that when gold goes to $3,000 plus as Goldman Sachs, and trust me, they're going to continue to revise, and silver goes to triple digits, which if you look at the numbers, do your own due diligence. Okay, we're not your advisor. Speak to those you trust. But when you look at the numbers, and we're not the only analysts in the market, there's lots of analysts calling for triple digit silver. You know, you've got Jim Rickards calling for $20,000 gold. You know, sometimes it feels like la talk, but look, you look at the numbers, you could see gold going massively higher. That's going to pull silver up with it. Mm-hmm. And, you know, do you really want to worry about 40% capital gains?
No.
You know, we don't report, but you're on the honor system to do that. Speak to your tax lawyer, your accountant about those things. But in a TFSA, you just don't have to worry about it. Mm-hmm. You just pick up the phone, sell your product, get your cash, and profits are all yours, right? Tax free. That's the whole point. So give us a call. We'll show you how to work on that. Jerry, what do you want to do for next? You want to talk about the election? You want to talk about Judy Shelton?
Yeah, we can get into the election. I just want to actually comment about the whole LBMA accreditation. I think that's a very important facet when we talk about your exit strategy, and that's why people give us a call at 1-8778-SILVER and the website guildhallwealth.com to discuss your strategies. You're now holding metal, and it's very important to not be just a number. You want to have a relationship with us. We want a relationship with you because we want to discuss who are you? What is your scenario? What are you really focused on? Because you're buying gold and silver, you're holding gold and silver because there is some uncertainty somewhere. You could be worried about the taxation. You could be worried about the digitization of our assets. You want to get out of this risky digital banking system that is now zero reserve banking. You know, you don't even have to hold reserves in the bank in order to give any loans anymore. There's so many risks with banks as we're talking about banking risks, you name it. So why add a compromise? If gold and silver, since gold and silver are your wealth insurance, because they are liquid. Number one, they're fully liquid. And then secondly, they are fully decoupled from a crazy financial system with fiat currencies that can be printed at will. You want to ensure that, you know, you have LBMA product because your experience is what is most important. Your liquidity is what's most important. And just by going with a little bit of cheaper product, by buying, let's say, calling out Sunshine Mint, you're holding Sunshine Mint because it's $20 cheaper on the 10-ounce bar. Well, you're adding a layer of uncertainty for your insurance policy. Would you do that for your life insurance, your car insurance? You're going to get full coverage. You're not going to compromise. You're going to pay the best to get the best. And we want you to give us a call. Give us the best gold and silver RSP specialists in the market to find out how you can hold precious metals physically in an RSP, in a TFSA, in your Lira, and we'll discuss strategies, whether it be the silver to gold ratio, a silver to Dow ratio, and what to do at these certain times. Do you want to sell or maybe unlock some of the liquidity without having to sell? There are many, many options that we want to help you with and show you and guide you along the way. But it's a very exciting time as we head into the election. We're heading into probably the most exciting time because, you know, the volumes are lightening up. It's creating a really good buying opportunity in the silver market especially. Look, just a couple weeks ago, when we look at the silver to gold ratio, we were down at 78-1, Jeremy. So you need 78 ounces of silver to get 1 ounce of gold. Silver was on fire, touching 38, 34, 50, 30, getting close to, 34, 80, 35. And then we're back to 84-1 just in a matter of a few days. All the while, the Canadian dollar is losing value, probably going to do another jumbo cut for you Canadians in December. It's just getting worse and worse. This is the opportunity to look at silver and get in. This is the time to get really aggressive in the market.
I should have sent this to you. So I was watching this thing on Instagram. It was a race, and it was a GTI, okay? And the GTI was on fire against these Porsches and stuff, but you could see it was just
A Volkswagen GTI?
yeah.
Nice.
But it was just like the suspension was crazy. Like it was
Shaking.
It was shaking, but it was winning. It was just passing cars, and it was just going through, going over a little bit off the road a little bit, and and that's silver. It's a little off the rails, but it's winning. It's one of those things. It's like it's a little volatile. It's a little crazy. It's not it's not like gold that has this amazing suspension and all. But
that's so true.
But right?
Yeah,
I should have sent it to you and said
I need that.
Here's the silver market racing to another high.
That's so good.
Yeah,
that's a perfect analogy. That's what it is. Just like your voice, you're just rolling with the punches. You lost your voice one week, you got it back, and you lost your voice again. Your voice is like the silver market, Jeremy. You're still winning. You're still up 45% on the year. Gold's up 35% in the year. But these are good buying opportunities. Take advantage of these dips, because as we head into the election, which is next Tuesday, November the 5th, and then next Thursday, November 7th, the U.S. FOMC, they're going to be hiking rates, or cutting rates rather, in the U.S. So that bodes very well for precious metals. So take advantage of these dips.
The number 18778 silver, the website guildhallwealth.com. Okay. So look, if in January we have the same basic administration that we have now, okay, don't expect much changes. They are not gold enthusiasts. The rigging of the market, or these 400 million paper ounces, would continue. This kind of weaponization of the dollar would continue. Now, you might still have green policies, which would be very, very good for silver. But basically, and this is kind of a quick, in a nutshell thing, because you just get the same. You just get more of the same. But we're hurtling towards massive issues in the banking system, and eventually you're going to have a crazy collapse. So you have this kind of combative administration towards other countries, weaponizing the dollar. You're going to increase the tensions with BRICS nations. And so I think gold becomes a go-to in the sense of the fear trade, and also the trade to protect against the risks in the financial system. And then the Green New Deal, things like that, silver becomes in demand because there's the way they're approaching it, the way it's been approached has been very ideological. It's not necessarily like, can we do it? No, we're just going to do it. It's like bike lanes in Toronto. Like, oh, we say we researched it, but we're just going to do it and see what kind of chaos it causes in the real world.
Is the Green New Deal still a thing?
I mean,
it's probably
they're saying there's new silver panels that take twice the amount of silver.
They have those
but
already,
but they're better already. So you'll have to basically see you will see a continuation of technologies continuing to grow. Okay, so now it gets interesting if there's a new administration and you have Trump getting in. He's talked pretty much extensively about tariffs and the McKinley model. And the McKinley model, there were tariffs. There was no income tax in the late 1880s, because there was no Federal Reserve. So, basically the way it looks like it's going, okay, and we're not talking about the man. This isn't an ad hominem attacks on anybody. We're just talking about policies here, okay? In the 1880s, there was no Federal Reserve. That meant the money was being produced at the Treasury, or the currency, and so there was no loans associated with it. So there was no income tax required to pay interest on the cash or the currency being distributed by the Treasury. Okay? So if you go back to a McKinley model, you could in effect end the Fed, because you're probably going to go back to the Treasury. I've heard talk of these tariffs, but a lot of it has also been rhetorical talk, right? It's, I'm going to talk about tariffs and the threat of them to see if I can get a deal done, right? Not necessarily placing them, though we've seen them done in the past. Mm-hmm. Now, the other thing about McKinley is that he was a gold standard enthusiast. Now, this is a little bit of a for better or worse situation, because he was up against William Bryan Jennings, who was pro bimetallic standard. Now, they went to a gold standard, and what it did is it prevented and steadied the ship against crashes and recessions and depressions, and they were able to steady the ship and create massive productivity in the United States by a gold standard. It doesn't mean that the bimetallic standard wouldn't have worked, but the gold standard did. So in the next segment, we're going to keep on this subject to understand what the McKinley model was, because it's been very clear, because Trump has talked about it a lot. Maybe not a lot, but he's mentioned it several times.
That's more than enough.
This is the type of model that you would be expecting, or a version of it coming up if in January there's a new administration. The number 18778 silver, the website guildhallwealth.com. You know, gold is up over 600% in the last 20 years. Silver is not far behind. It's been an incredible run. It's not that the prices are rising as much as the value of the currencies are falling. This is very important, because as it stands now, the only way to pay back debts is to devalue the currency. Although one way you could also do it is to revalue gold. And as our listeners know, we have reported very much throughout the year and last year about central banks acquiring physical gold and now silver, and also talking about central banks have discussed the concept of revaluing gold. And it's such a positive prospect for the market, because if you can double, triple, quadruple the price of gold, your ability to pay off debts becomes so much easier, and also you enrich yourselves. And we know that gold is incredibly undervalued. Anyone who does a modicum of research can see that gold is undervalued, silver's undervalued against the debt, against the stock market, against real estate. It's pretty obvious when you look at gold as a measurement just how undervalued it is. And so you can see what kind of runway we have going forward. So, Jerry, we were just talking in the last segment about what we could see if there's a new administration coming in. What does that mean for gold and silver? Again, I think that gold being revalued is definitely already happening. It's being remonetized in the world. Central banks are buying it. Would the Federal Reserve even exist in a new administration? What do you think?
This is a hot topic, obviously up for debate. I think things were said that talked about and brought the Federal Reserve into discussion. I think that's very important that we are now seeing that the Federal Reserve is now hitting mainstream, where Brookings Institute's talking about it, and even Business Insider is talking about this. And, you know, there's a split. You know, will anything change under a Trump administration or a Kamala Harris administration? Nothing will change. They're going to be inflationary. They're going to money print. You know, Trump did a lot of money printing, and it will continue to be printed under both regimes, for sure. You know, but we are seeing a difference underlying what their stances are. Where what came out earlier this week from the Brookings was a headline that said candidates contrasting plans for the Federal Reserve. So it's gone really mainstream. Why the Federal Reserve? Well, we're really focused in and honing in on debts, and we're talking about the politics and how, as Judy Shelton says, that the Fed has become too prominent, too powerful, and too political. Under Harris, according to Brookings, Harris endorses more conventional respect for Fed autonomy. So leave them alone. Let them do what they have to do. Let the banks and the Fed be political. Leave them alone. However, contrasting view from the future Trump administration, where you're going to have a restructuring of the Federal Reserve. You know, there was a memo back in April in the spring of this year. A new memo aims to give Trump a say in the Federal Reserve interest rate decisions, that he could actually oust Jay Powell,
the chairman
Jay Powell, before his term's up. That they want to restructure the Federal Reserve, and I even brought a copy of the bill that has been passed by Mooney out of Alabama, to define the dollar as a fixed weight of gold. So this is a Gold Standard Restoration Act, a bill that's been positioned, and this is a very different contrasting view moving away from a fiat-based system.
And we're also seeing state by state, taking off the taxes off gold and silver, making them eligible to pay taxes, things like this. State by state, we've been tracking that news, that sort of remonetization of gold and silver throughout the United States. But Jerry, let me ask you this then. If Trump has promised to get rid of inflation, if inflation were to come way down, wouldn't that prohibit in a way or take away one of the reasons why people are buying gold and silver in the first place? So would you say that if inflation comes down, you're going to see gold and silver go down with it?
No, because when you create a standard from gold, you have to actually revalue the price, and therefore you create a floor for the gold price, because you can't level off the debts, you cannot reserve the currency, you cannot bring life back to the currency by allowing gold to be pegged higher temporarily. We're just going to do a temporary inflation here, and then have it go back down. Judy Shelton even talks about going into deflationary mode, why have a 2% target? It doesn't work. So I do believe that we're going to be seeing a restructuring of the Fed. And she had an interview this week, that was talking about her book, called, what's it called? I'm sorry. As Good as Gold. Sorry. And she was saying that, the dollar needs to be linked back to gold, a classic gold standard. And in this interview, she said that we need to initiate serious reforms aimed at recapturing the economic benefits that were earlier achieved. Talking about the McKinley system earlier. Whether that means restoring some of the rules that permitted the Bretton Woods system to function for more than 2 decades, or exploring new proposals for an updated gold standard, reminding that the U.S. has 261 million ounces of gold.
I gotta just jump in there on this, because we're avid consumers of the gold and silver history. And it seems like the U.S. got it right off the bat with the gold and silver, as money and the Constitution, and it was a bimetallic standard. And, McKinley, I have to say, the one bad thing about him is he let the bankers encourage him to get rid of the bimetallic standard and go for just a gold standard. And that kind of opened the door and led the way to the Federal Reserve System. Mm-hmm. And, when they did the Bretton Woods, they also kind of had the bankers kind of slip in there and say, we want it at $35 an ounce. And they limited gold in many respects. And they limited that system that was going to be bound to break eventually as well. So, I know that these could be crazy reformative times. I just hope they get it right. Even Winston Churchill, he revalued gold, I think in the 30s, but he didn't do it enough. Right? I remember Jim Rickards talking about that in one of his books, that they got the revaluation wrong. Yeah. If you're going to do these sorts of things, you got to get it right. You just hope that the people who are really looking at it, and I hope that I hope it happens. I know, just as a final word, I know that you mentioned Judy Shelton. She's been cozy with the Trump administration in the past. We know that J.D. Vance, as a potential VP here, that he owns both Bitcoin and gold. And he worked very closely. Who did he work closely with? Peter Thiel. Yeah, Peter Thiel. Who has held gold in the past and is a gold enthusiast. So, I think that could be very positive for us going forward. I think that a good economy doesn't necessarily mean bad things for gold. I think you still have to worry about the debts and figure out how to get rid of them. Mm-hmm. And part of that is revaluing gold much, much higher.
Absolutely. And I think as we approach the election, this is something that we have to really embrace, and that we want the power back to the people. We want the independence back to the people. And one way to do that is to own physical precious metals for yourselves. Become your own central banks. Don't rely on the central banks to do it for yourself. Just as a big reminder, Canada has no reserves, no gold reserves for its people. Central banks are loading up on gold reserves. You should do the same, and you want to give Guildhall wealth to help you do that. Give us a call, 1-877-8-SILVER, and the website guildhallwealth.com or guildhallpreciousmetals.com.
This is the moment you knew you were waiting for, but didn't know you were waiting for. It is going to be pandemonium. We are going to go head to head with our heroine, Judy Shelton, against old Yellen. Old Janet Yellen. Did you see her this week? Or was it? Yeah, it was last week. She was giving some speech, and the Treasury seal fell off her podium.
How symbolic is that? Yeah, she actually spoke this week at the American Bankers Association, and she started going off and blaming all of the banking instability on not themselves, not the ones that were involved in creating the financial disasters and printing trillions of dollars into the economy since the '08 crisis. No, and not on themselves. They blame people and their fraud that threatens banking stability. Further scapegoating.
Do you think that Janet Yellen ever went to a Pete Diddy party?
Oh, for sure. Look at her.
Is she Pete Diddy adjacent?
Oh, Yellen, get over here.
Yeah, we don't like her. She has no understanding of the real world. I ain't buying the granny innocence. Trying to sell me oats and debt. I just don't buy it. We love Judy Shelton. She is a real American. What did you want to talk about with her?
She talks a lot of that. The US dollar used to be good as gold. And when we're talking about, this is an underlying issue. The underlying issue is the currency here. And we have to understand that, what failed in the past were banksters that came in and usurped the whole idea and stole the freedom away from the people through the creation of their own currency. Give me the power to create the nation's currencies, and I care not who makes its laws. We know who said that. Don't need to quote his name on this show, but we know the currency is the problem, and the currency needs to be fixed. And the dollar used to be as good as gold. Dr. Shelton proposed a new bold initiative to restore the US dollar's link to gold after more than half a century of breaking it. She said, what we used to do is use the gold holdings as a specific collateral for new treasury instrument, a long-term treasury bond. We should have the treasury issue treasury bonds. Those who buy it would have the right to at maturity to either take dollar-denominated face value of that bond or the pre-specified amount of gold. I'm trying to draw attention to the fact that the dollar used to be as good as gold. Her goal is to have a new debt instrument that embodies commitment to maintain the dollar's value in terms of the purchasing power inherent in a specific weight of gold. Remember, she was nominated to become the Fed chair by
be part of the Fed, not the chair.
The Federal Reserve Board under a Trump administration. She didn't get in, but I think in a new Trump administration, being so vocal and being literally on interviewed after interviewed, she'll be in the administration along with that Department of Government Efficiency, who's going to fix that. We're talking about Mr. Elon Musk, he's just on fire right now, talking about what's going on. And even Ron Paul summed it up pretty nicely this week that he wrote that Elon's cutting $2 trillion from the budget. Great idea. Start with some of the biggest welfare recipients, Ron Paul says. Number 1, military industrial complex. And number 2, welfare recipient, pharmaceutical industrial complex. Oh, and end the Fed.
That was yeah, well, he knows. The number 18778-SILVER, the website guildhallwealth.com. Gold is real money. Silver is real money. It's finite product. And the best way to hold it is to buy it direct and to hold it physically and have it allocated and fully segregated in a vault or even within your registered account. Jerry, just before we go, there was some really good diamond news, right?
Amazing news this week. I was waiting for this one for about 2 weeks. The yellow diamond earrings lead the Christie's auction sale this week in Hong Kong, led the way with a $60 million sale. This is really just showing, Jeremy, that the yellow diamonds, once you have rarity in your hands, this is an heirloom piece that will continue to go up in value. And I think what this market is also showing is that they know that as the U.S. is cutting interest rates, loose monetary policy is here. And historically, as we look back into the trends, fancy color diamonds such as these tend to go up in value year over year. As you print that money, you get ready for hard asset prices to continue to rise.
The idea here is follow the smart money. If you've got people putting $60 million into a pair of colored diamond earrings, got to look at that market. If central banks are buying gold and now silver, you've got to take a look at the market. Market, we feel, is going to continue higher. A lot of analysts are saying the same thing. You're continuing to get revisions from major banks. the number 18778 silver, the website guildhallwealth.com. If you've missed a show, you can check us out on YouTube, on Rumble. Please follow us on X. Thank you so much for listening this week and joining us. And can't wait to speak to you next week here on The Real Money Show on 640 Toronto.